Good afternoon, grade 12s. I'm Mrs. Wessels, and today I'm going to show you how to calculate the correct net profit if the wrong or the incorrect net profit was given. I'm also going to do, with that activity, I'm going to do note number 7 and 8 for the ordinary share capital and the retained income, notes for your balance sheet. That came from November 2015 paper. I didn't think all of these questions out by myself. I'm looking for questions that is a little bit more challenging, and that's what I'm going to do. After that, I'm going to do another note number 7 and 8 that came from September 2017. It was also challenging, and then thank you to the New Era textbook, I'm going to do asset disposal, note number 3 in your balance sheet out of New Era. So we are going to start with November 2015. It is question 3. You will see I've got it here. It is the information of Predona Limited, a company with an authorized share capital of 5 million ordinary shares. I think I added that because it was not given in the question paper. I'm going to do 3.1.1 first, refer to information B, calculate the correct net profit after tax for the year ended the 30th of June 2015. The moment that I see my year end for the first time, I write it on top of my question paper. So this one will be the 1st of July 2014 until the 30th of June 2015. It's just easier for me when I do calculations so that I can go back and see what is our accounting period. If you go back there, you will see they say indicate a plus for the increase and a minus for the decrease. And then you will see in information number B, the net profit before tax of 2493600 was determined before taking into account the following information. It means that all this information must still be taken into account to calculate the correct net profit. I'm going to start with the first one. Trading stock on the 30th of June was valued at 191,900. If you go to your trading stock in your information, you will see that your trading stock was a little bit more than that. That tells me that there's a trading stock deficit. Remember, I'm going back to the camera. Remember that when we calculate the net profit after tax, all expenses will make your net profit less, and all income will make your net profit more. Okay, and if expenses become less, your net profit will become more, and the same for income. So more expenses make the net profit less, more income make your net profit more. The first one was trading stock deficit. So we write the trading stock deficit, and the calculation is the trading stock in your information, 203,200 minus 191,900. There you go. And that gives you a trading stock deficit of 203,200 minus 191,900, and that gives us a trading stock deficit of 11,300 Rand. Remember, it's an expense, so it will make the net profit less. That will make your net profit less. Okay, the next one, we must go back to the information, and that tells us number 2, provision for bad debts must be adjusted to 9,000 Rand. If you look at your provision for bad debts on the first of the year, it was 11,400 Rand. So you can see that the provision for bad debts will become less, and that gives us an income. So we are going to put there provision for bad debts adjustment, provision for bad debts adjustment. In the meantime, you can quickly calculate the amount. adjustment. We will say 11,400 minus 9,000, 11,400 minus 9,000, and that will give us 2,400 rand, 2,400 rand. But remember, the provision became less, so that is an income for the business, so that one is a plus. Number 3 there, rent for July had been received in advance. So the rent income we received in advance for July. July is out of our accounting period, so that will give us rent income. That must become less. Remember, it's a deferred income with 2,800 rand, not necessary to calculate anything. So the 2,800 rand makes the income less, and if the income become less, then your net profit also become less. Number 4 is an annual insurance premium of 6,000 rand was paid for the period the 1st of April until the 31st of March 2016. What do you do first? You take the 6,000 rand and you divided it by 12. You take the 6,000 rand, you divided it by 12, and that gives you 500 rand per month. Now they mention that it was the 1st of April 2015, which is in our year, until the 31st of March 2016, which is not in our accounting period. So we count April, May, June. 3 months included. And then, of course, if 3 months is included, then 9 months are excluded. So that will give you insurance. The 6,000 rand was paid, but of that 6,000 rand, we must subtract 9 months. 9 months times 500 rand, that gives us 4,500 rand, and that 4,500 rand makes your, we must do the 4,500 there. It's 500 rand times 9 months. We are not busy with the income statement. Now, we are busy with the income statement, but we are busy correcting the net profit after tax. And that 4,500, the insurance become less, and less expenses will give you more. It will make your net profit more. The next one is the auditor discovered that the profit on disposal of a vehicle, 6,800, was incorrectly shown as a loss. So remember, if something is on the wrong side, we must double it. So we will say profit on sale of asset. It's basically correction of error. It was 6,800 rand, 6,800 times 2. 6,800 times 2, that gives us 13,600, and that 13,600 is a plus because we made a profit. Okay, why double? Because I'm going to show you there, if you show something as a loss in your income statement, so it is as an expense of 6,800 rand, and it's wrong. This is supposed to be a profit. The first 6,800 rand cancel the wrong one, and then another 6,800 will show you the profit. That's why it's times 2. If we do okay, let's quickly see the last one there. The last one there is income tax amounts to 750,000 for the year, and that is your income tax. 750,000 is a minus. So if we quickly do the calculation, 2,493,600 minus the 11,300 plus the 2,400 minus the 2,800 plus the 4,500 plus the 13,600, that gives us 2,500,000 rand, and then we minus the 750,000, and that gives us 1,750,000 rand for the new or the correct net profit after tax, and that will give you 13 marks. I'm going to do the retained income note that was asked, but I'm also going to do the ordinary share capital note. I'm also going to do note number 7. Let's just see which information we are going to use. I want you to look at that amount there. I'm going to highlight it. 5,600,000 for ordinary share capital. Is that the end of the year or is that the beginning of the year? I don't know, we must read. So if you go there, you will see at the beginning of the year, 3 million shares were in issue for 3,900,000 rand. So that shows us that that amount is not the beginning of the year, but I don't think it's the end of the year, because I'm going to show you the balance sheet. I'm going to show you the balance sheet, and in the balance sheet it was added there as 5572. So you can see that there's 3 amounts now that we are working with. There's 3,900,000 the beginning of the year. There's a 5,600,000 somewhere, and then on your balance sheet is 5572000. So let's quickly do that note first before we go to the note for retained income. I will stick to the information. Remember, I said that 5 million shares was authorized. So we will say 5 million ordinary shares. Remember, you cannot just say shares because we also have preference shares, but in the school syllabus we only work with ordinary shares. I'm going to start with the 3 million and the 3,900,000 rand. So I'm going to start with the 3 million shares and the 3,900,000 rand, and we say in issue, ordinary shares, in issue, beginning of the year. And we don't show any amount there, no amount there. Okay, let's go back to our information. The information said that we issued 1 million new shares at R1.70 each on the 15th of August. This has been recorded. This has been recorded. I will come back to this. Let's go there. 1 million new shares at R1.70. So we are going to issue 1 million shares, ordinary shares, and you just say issued during the year, and please show your R1.70 there, and that gives you 1,700,000 rand. If you add those two amounts, remember they mentioned this was already recorded. They mentioned this was already recorded. So if we add those two amounts, 3,900,000 plus 1,700,000, we get the answer of 5,600,000, and you will remember that was the amount that I highlighted there, 5,600,000 rand. Sorry for that. Okay. So what I want to show you is that it was not really necessary for them to give us that amount there. If they take that away and you see this has been recorded, you will still be able to do this. Please see that the two amounts together give you that 5,600,000 rand. We buy back shares, 20,000 at R2.50. This has not been recorded. 20,000 shares at R2.50. I write the 20,000 in brackets there. Ordinary shares bought back. But I don't write the R2.50 there. I don't write the R2.50 there because I can only use my average price. So how do you calculate your average price? You take the 5,600,000 rand money divided by shares. 4 million shares. So it's money divided by shares. So there's the 5,600,000 divided by 4 million shares, and that gives us R1.40. So R1.40 is our average price. And remember, you can only take out of your ordinary share capital at average price because this is the only amount that you've got. So you can only put R1.40 there. You cannot put R2.50 there. But R2.50 minus R1.40 gives you R1.10. So where are we going to get that money from? From retained income. From retained income. Okay, that we will do later. So now you say 20,000 times R1.40, that gives us 28,000 Rand in brackets because it's buyback shares. Now you do the calculation on this side, and that will give you 3,980,000 shares. And on that side, 5,600,000 minus 28,000, that gives you 55,72000, which is exactly the same amount as the amount that was given on the balance sheet for ordinary share capital. I've got the balance sheet here with me. We are not going to do the balance sheet today, but there is the 55,72000 for ordinary share capital. Just want to show you something that when your last action was buyback, and then you've got the balance at the end of the year, this amount will always lie there at R1.40. Okay, but we're not going to show it. We don't show it. I'm just going to prove this to you. 55,72000 divided by 3,980,000, that gives you R1.40. That is because the last action was at average price, then your balance at the end of the year will always also be at average price. But you just say ordinary shares in issue, end of the year. Okay, so the next one that I'm going to do is a little bit more challenging, but I just want to show you that whatever amount is your average price, your end balance will also be there at average price if your last action was to buy back shares. We are going to do the retained income note. The 2,700,000 was given to us. Make sure that you know the note. Net profit after tax. Why after tax? Because the tax was already subtracted in the income statement. There's no place for tax in the retained income. That's why you say after tax. You already subtract the tax. So that gives us 1,750,000 Rand. Then we say buy back shares. And please show it was 20,000. Show the 20,000 and show it times R1.10. You'll remember I asked if the buyback price was 250 and we only take 140 out of ordinary share capital. Where are we going to take out the R1.10 from your retained income? So 20,000 times R1.10, I think that is 22,000 Rand. In brackets, buyback shares is always in brackets. Then we've got our dividends and we said paid. Remember, paid is your interim dividend and recommended is your final dividend. Let's quickly go back to our information. Interim dividends of 600,000 were paid on the 31st of December 2014. There's our interim dividends. 600,000. And then final dividends. The directors declared a final dividend of 22 cents per share on the 30th of June on all shares issued to date. It means on the 30th of June, if you're not a shareholder anymore because they buy back the shares, then you are not going to receive dividends. If you're still a shareholder and they buy back the shares on the 30th of June, for example, 2 hours before they declared a final dividend, then they are going to give you a dividend. But in this case, the shares was bought back on the 31st of May. So they mentioned their shares repurchased on the 31st of May do not qualify for final dividends. So we are going to calculate the final dividend as 22 cents on the 3,980,000 shares, not on the 4 million, because it's after buyback. So 3,980,000 times 22 cents, and that will give us 3,980 times 22 cents. That will give us 875,600 plus the 600,000. That gives us 1,475,600 there in brackets. So you start at the top, 2,700,000 plus 1,750 minus 22,000 minus 1,475,600, and that gives you 2,952,400. And if you must do the balance sheet as well, that goes to the balance sheet. There's the retained income, 2,952,400. 2,952,400, and that is your two notes. The two notes, note number 7 and note number 8. I'm going to do another two notes, but now I'm going to September 2017 in the books of Bazo 48 Limited. That was September last year, and I remember that a lot of the learners came out of the exam venue and said that there was not enough information. So I'm going to show you how to use the information given to you so that you don't struggle with the same problem. Okay, we're only going to do the two notes. I'm not going to do anything further than that. Just want to show you the notes. If you look at the information, it is not a lot of information. They say 4.1, prepare the following notes to the financial statements for the year ended the 28th of February 2017. Remember, I go quickly there and I write on top, okay, we're not going to do the fixed assets today, but I write there the 1st of March 2016 until the 28th of February 2017, and that is my accounting period. If you look at the information, they mention additional shares were issued. They don't give us figures, they don't give us the amount. Shares were repurchased from shareholders. The 9 Rand is the repurchase price. That's not the one that we're going to use. Remember, we are going to use the average price. An interim dividend was paid. They don't give us any information there. Additional shares were issued. And then a final dividend was declared. Okay, if you go to that was the information in number B, and if you go there, you will see, sure, that there's the share capital at the end of the year and the retained income at the beginning of the year. If you go back to the answering sheet, luckily there's a little bit more. There's a little bit more information there. Remember, this one was given, and this one was given in the information that you saw there, but luckily they gave us a little bit more. Okay, the first thing that I'm going to do, I'm going to solve the ordinary share capital note with the information that we've got. and that is not a lot. The first thing that you do is you calculate the average price by taking the amount divided by the number of shares issued. Remember, in the previous activity, I show you that if your last action was buy back shares, then your end balances will also give you the average price. So we say 24510,000 divided by 3,800,000 shares, and that gives us R6.45. So the moment that you've got R6.45 there, you know that you buy back at R6.45. We've got the amount, so you say 129,000 divided by R6.45. That gives us 200,000 shares that we buy back. So now can you see that that helps us a lot? 200,000 ordinary shares bought back at R6.45. Now we can finish this side. We can say 3 million minus 200,000 gives you 2,800,000. The answer at the end of the day is 3,800,000. So there was 1 million shares, ordinary shares issued during the year. We are looking for an amount. I'm going back to the information quickly. Remember, there was nothing. They say additional shares were issued. Shares were repurchased at R9 per share, but luckily we've got the average price, so we go back there and we say, okay, we've got the R6 there. The R6 helps us a lot. So you say 3 million times R6 each gives you 18 million rand. Please don't skip one of the zeros because you cannot show 1,800,000. It's not going to work. Okay, can you see that this was our balancing figure on the left hand side, and this is our balancing figure on the right hand side. So you say 18, 1, 2, 3, 6 zeros there, minus 1290, give you this, and your answer must be 24510, so you can say minus 24510,000, that gives you 7,800,000, or I think an easier way to do is to start at the 24510,000, then you add 1290, and you minus 18 million, and that gives you 7,800,000, and it was 1 million shares, so it was there at R7.80. R7.80. Can you see how easy this is the moment that you've got the R6.45? Think for yourself. If you don't have the R6.45, you cannot do this one. You cannot do the 200,000. If you don't have the 200,000, you cannot do the million. Are you with me? So that figure you can figure out, but you cannot do one of those two there. So very important to remember that the end balances is also there at average price if your last action was buy back shares. Retained income, they gave us the net profit after tax. We must say buy back shares. 200,000. Remember R9. R9 was the buyback price, so 9 minus 6.45. That gives us R2.55 times 200,000 shares, and that gives us 510,000 Rand, always in brackets, because we buy back shares. We buy back shares. The dividends, remember that they don't give us information on the interim dividend. They just say was paid, but luckily they show us what to do. And then the final dividend was declared on the 28th of February, only shareholders on the current share register are entitled to final dividends. So I'm coming back to the October shares that we buy back. They will not qualify for final dividends because they are not on the register anymore on the 28th of February. So we are going to say 3 million recommended. You work with the 3,800,000 shares times 50 cents, and that gives us 1,900,000 rand. Add the 1,200,000, that gives us 3,100,000 in brackets, and then you say 1,370 plus 3,250,800 minus 510,000 minus 3,100,000, and that gives us 1,010,800, 1,010,800. Okay, that was September 2017. That was question 4. After the note for the fixed asset, it was note number 7, ordinary share capital, and note number 8 for retained income. And the learners struggle because of that R6.45 that they didn't calculate. I'm going to say it again. If you haven't got this, you haven't got the 200,000. If you haven't got the 200,000, you haven't got the million. If you haven't got the 200,000 there, you haven't got it there. Then you cannot use your 9 Rand because you don't have the average price. So please be aware of this and concentrate on this. The last activity that I'm going to do today is from the new era. It is task 3.15. Task 3.15. It's an asset disposal that was not, it's not done. There's a few mistakes in there. So I'm going to try to fix it. And then we're also going to do the note, because the question was, don't think it was the income statement and then the balance sheet with notes. So basically, I'm going to do the ledger accounts. I'm going to do the ledger accounts to show you that what do you need to calculate whatever you need to put in the income statement and the balance sheet. So we're basically going to do the rough. You're provided with a pre-adjustment trial balance of Star Shoes Limited at the end of their financial year, the 31st of October. So we quickly go there. So our accounting period is the 1st of November 2013 until the 31st of October 2014. If I've got my accounting period, I know what to do. I know how to think about all of this. Okay. They say, unfortunately, their accountant fell ill recently and was not able to complete the financial statements. Your assistance is required. I'm only going to do adjustment number 7 and number 8. If you look in the pre-adjustment trial balance, there's your cost price for equipment, there's your accumulated depreciation, but this bothers me and this bothers me because that is not always there. The fact that there's already depreciation show us that they already did the depreciation from the beginning of the year until the end, until the date of selling, and the date of selling is the 1st of August 2014. And there's also asset disposal, so it means that we did some things in the asset disposal, and then they say the asset disposal account has not yet been completed. The entries which have been put through already are equipment on the debit side, so I'm going to copy that, 2014 August the 1st, equipment on the debit side, 24,000 Rand. Remember, what is the 24,000 Rand? That is your cost price. 2014, August the 1st, on the credit side, accumulated depreciation on equipment, GJ, 14,400 Rand. 14,400 Rand. I will come back there. I just want to quickly do the steps. Remember, if you do asset disposal, you do steps. Step 1, I know it differs from book to book, but I'm going to do the new era, is your additional depreciation, meaning from the first of the year until the day that we sell the asset. Step 2 is your cost price. Step 3 is your total accumulated depreciation. Step 4 is your selling price. Step 5 is the profit or loss that you made on this sale, and then it is depreciation on remaining equipment. Okay, so if we go back to the information, I'm going to read the information. Why do I put the steps down? So that it's only necessary for me to read once and then I'm done. There you see the cost price. There's the cost price, 24,000 Rand. That is step 2, so the cost price is 24,000 Rand. What you see there is step 3, the total accumulated depreciation. So that was 14,400. So you will see that I just add those two. I put in the cost price of 24,000 and the total accumulated depreciation of 14,400. These entries are in respect of equipment which was sold on the 1st of August. The depreciation rate on equipment is 10% per annum on the cost, and we always smile when it's on the cost because we know this is the easy one, not the diminishing balance. But the bookkeeper had depreciated the asset for the entire year instead of for only 9 months. Where does the 9 months come from? November, December, beginning of the year, November, December, January, February, March, April, May, June, July, because we sold on the 1st of August. So the problem is that they did step 1 as 10% on the 24,000 Rand for the whole year. And then they add that 22,400 Rand to the accumulated depreciation. And if you subtract it, they show you 12,000 plus 2,400. But this is wrong. It was supposed to be 10% on the 24,000 Rand only for 9 months. And if you calculate the 2,400, that gives you 2,400, only for 9 months, that gives you 1,800 Rand. So the difference between 2,400 and 1,800 gives you 600 Rand. So it means that we must subtract 600 Rand there because it's wrong. So that one is 14,400 minus 600, so that one is actually 13,800. 13,800. Okay. Let's quickly go. We must read. They mentioned that you are required to correct this error and then enter the selling price of 8,000 Rand. The asset has been purchased by the managing director's brother for 8,000 Rand. He had supplied the post-dated check, which falls due on the 30th of November. We are only in October now, so we just show it as debtors control because we sold it on credit. So debtors control on this side. We sold it for 8,000 Rand. Remember, that was your selling price. 8,000 Rand. And then you ask yourself, what is the carrying value? What is the carrying value on the date of selling? That is the 24,000 minus the 13,800, the correct amount. And that gives you 24,000 minus 13,800. That gives you 10,200 Rand. We sold it for less, so we are going to make a loss. But to calculate your loss, put the 24,000 there, put the 24,000 there, and you just say 24,000 minus 8,000 minus 13,800, and that gives us a loss on sale of asset of 2,200 Rand. Everything in this asset disposal account is 100% correct because we already correct the mistake. So this is step 2. This is step 3. This is step 4. And this is step 5. Make sure you understand the steps. The problem is not the asset disposal account. The problem is the note. Because where must we start? Okay. If you look at the information. The information given for equipment was 290,000 and for accumulated depreciation was 158,000. Can I quickly show you this 9,600? That 9,600 came from the 24,000 on your calculator, 24,000, that one there, minus the 14,400, minus 14,400, that gives you the 9,600. Can you see the depreciation of 2,400 was wrong? It was supposed to be only 1,800. Okay. You cannot start with a balance of 290,000 on top. What must you add back? You must add back the 24,000 Rand that was already done for step 2. Already done for step 2. If we can do the vehicles account, quickly, remember on November 2013, the first, there was a balance brought down. Vehicles is a plus minus account. The balance brought down was something, and then on 2014, August the 1st, they already take asset disposal. GJ, they already took 24,000 Rand to the asset disposal account, and the balance after that carried down was 290,000 Rand. Can you see the balance was 290,000 Rand? And it was after the asset disposal was already done, because you can see the 24,000 was already done. So if you add the two together, 24,000 plus 290,000, you will have 314,000 as your opening balance. And after the asset disposal, there's a balance brought down of 290,000. That will be 2014, November the 1st. That will be October the 31st. So we are going to do the same in our note. So we are going to start with 314,000. And of course, we are going to end with 290,000, because that's our two balances. There's your vehicles account. Oh, sorry, this is, equipment. Okay, so the equipment account. Can you see that we add back? We add back the 24,000 Rand that was already done to get to the 314. So those two balances are correct. The accumulated depreciation one is given as 158,000. Okay, I'm going to do the account quickly. It's a minus plus because it's a negative asset. So 2013, November the 1st, the balance is on the credit side, but we don't know what that balance is. Okay, draw down. Then they show on August 2014, the 1st, they show depreciation of 2,400 Rand. That was wrong. But remember, I'm not going to mark it wrong now because that's what they did. And then they take 2014, August the 1st. They take to asset disposal. They took the 14,400. So if we stop there, if we just stop there, what was the balance? What was the balance? The balance was after that, okay, I'm going to put it in there with a pencil. The balance that they gave us after this is 158,000. So what we must do is we must add back so that we can get to the correct balance. So we say 158,000 plus the 14,400 minus the 2,400 on the other side. That gives us an original balance of 170,000 Rand in the accumulated depreciation on equipment. So if we want to start there with 170,000, what will your bracket be? What will your bracket be? Just show your bracket. What did we do? We say plus 14,400 minus 2,400. Okay, please can you see that you cannot start with the 290 that's given, and you cannot start with the 158,000 that's given because of whatever there is. Remember, we put the 290,000 there. I'm not going to put the 158 there because I know, or maybe there's another deep, yeah, there is, we must still do step 6. Okay. So please see that I use the wrong amounts to get to the correct balance on top. Because the wrong amounts was subtracted. So I just want the 170,000. 314 minus 170,000 gives us 144,000. That was the carrying value at the beginning of the year. We didn't buy anything new. Disposal at carrying value. At carrying value. Step 2 minus 3. 2 minus 3. 2 is the cost price of 24,000 Rand. And 3 is 13,800. Not the 14,400 because we already correct the error. And remember that we already show carrying value, and that gives you 10,200 Rand. 10,200 Rand. Depreciation for the year. Remember they already showed 2,400, which was wrong. But you cannot ignore it. So you start with the 2,400 for depreciation. Then you minus the 600 Rand to correct the error. And then adjustment number 8 said that we must provide for depreciation on equipment on cost price. That is the end of the year. So we must calculate our depreciation. Step 6. 10% on cost. Can you see? 290,000 was the balance in your equipment account at the end of the year. 290,000 Rand. Remember, they gave us that balance and they gave us that balance. 290,000 plus 158. We use both of them to calculate the correct opening balances so that we can do our note. So that will give us plus 29,000. Remember, 10% of 290,000 gives you 29,000 Rand for depreciation. Step 6. Step 6. So the depreciation was not 2,400. That was wrong. Minus the 600 because it was supposed to be 1,800 plus 29,000. That gives you 3,800 in brackets. Now you say 144,000, that one there, minus, give you that one there, minus 10,200, minus 30,800 gives us 103,000. You can have an answer there, it doesn't matter. If you want to show your movements, you're more than welcome. Okay, most of you now just say, okay, 290,000 minus 103,000, and that gives you 187,000 there, and you put the 187,000 there. In this case, it's 100% correct. But most of the time, it's not correct because you slip up somewhere. So that's why I want you to know how to calculate that. In this case, it is correct. But I still want to show you how to calculate it. Let's go back to our account. Okay, this was wrong. It was supposed to be 1,800. If that is wrong, the 14,400 was wrong. Remember 600 Rand less than that. Can you remember? 13,800 goes to asset disposal. 13,800 go to asset disposal. We ignore this now because we are going to calculate our own balance. We show the new depreciation. Remember, this was step 1. We show at the end of the year. What was our end of the year? October the 31st. Depreciation. Step 6. Do you remember step 6? 29,000 Rand, and we show the 29,000 Rand. Now we add the credit side, we minus the debit side, and that will give us a balance. October the 31st, because end of the year. So we add the credit side, so 170. But now we work with the correct amounts. 1,800 was step 1. 29,000 was step 6. That gives us 200,800 minus 13,800. That gives us a balance of, if you put the 200,800 there, that gives us a balance of 187,000. November the 1st, balance, I want you to see the whole one, balance brought down 187,000. And if you put it in your note, it was 100% correct, but remember most of the time it's not. And let's see the calculation for this. I will say the 158 was given to us. The 158 was given to us. So I will say, okay, just plus the 29,000. Because remember, the 158 was up till there. With wrong calculations, but it was 100% up till there. So if you say 158,000, and you add the 29,000, you've got the 187. But if you want to show a better bracket, look at the account. You start with the credit side. 170,000 credit side plus 1,800 plus 29,000 minus debit side 13,800. And that gives you the 178,000 rand. This was, as a disposal, a very challenging one. Thank you to the Neo Era textbook. With a note, I really hope that it helped you. I think it was a good activity to do, as well as the September 2017 note number 7 and 8. So grade 12s, thank you for listening to me, and I really hope that everything that I explained to you today helped you a lot. Thank you.